welcome to this Moneycontrol live stream. I'm Nandita Khemka, and of course, in this live stream, we'll be talking about the RBI MPC policy decision that is due later tomorrow at 10 a.m. Of course, this is the first policy of FY25 and the last one before the general elections. So the consensus is that it will be a status quo policy for the 7th straight time. A no surprises policy is what the street is anticipating. But could there be a change in stance? Could there be any tinkering with the forecast when it comes to inflation as well as growth? Well, to answer all these questions, I have with me the banking editor of Moneycontrol, Dinesh Unnikrishnan. Dinesh, thanks a lot for joining in. Let me first begin by asking you, would this be another unexciting, no surprises kind of policy in terms of rates? And would you be surprised if there is at all a change in the stance?
First of all, thank you for having me on the show, Nandita. I think you have kind of rightly summarized the larger setting for this policy, that I don't expect any dramatic change in terms of rate actions or stance either in this policy compared with the last policy. For the reason that, if you look at the core concern of the Reserve Bank of India led Monetary Policy Committee, after bringing down the inflation from, above 6% to below 6%, 2 to 6% is the band they are working with. Now their whole focus is to bring it down to align it with the 4% medium-term target. That hasn't happened yet. So there have been multiple questions in the previous policies with the RBI top officials on what is the thinking within the Reserve Bank of India in terms of rate action. So they have been stressing on this point that, first inflation needs to be very comfortably aligned to the medium-term target of 4%, which hasn't happened yet. So I don't expect any rate action as such. For the stance, there is no reason for the Reserve Bank of India to step back from the withdrawal from accommodation stance at this point, because materially nothing really has changed apart from some comfort on the inflation and growth front. But having said that, RBI can of course signal a future rate cut maybe later in this year or say post-June by initiating a change in stance. That is very much possible.
Okay.
Yeah.
So, you spoke about inflation coming down.
Right.
It's still away from that 4% goal, but it has come down to 5%.
Yeah.
Core inflation has also come down. But food prices, I think, are still sticky, Dinesh.
Right.
Going forward, there is, a forecast of, heat wave conditions, right, till about June. But there's also been a forecast of, El Nino shifting to La Nina in the second half of the year.
Correct.
How does this bode for food prices? And in light of, all these, factors, will the RBI or can the RBI tinker with inflation forecast, perhaps bring it down a little lower, or do you think they'll be cautious and they will stick to what they have?
Well, if you see the inflation forecast at this point for the fiscal is 5.4%. That is what they have said last time. Now, there are, the way RBI looks at inflation numbers is slightly different from what the general public typically look at it. We look at it the headline inflation, right? So, headline inflation, if see January and February numbers as largely around the same level, around 5.09, around 5%. So there is still room for the headline inflation to ease.
Okay.
The core inflation is also very, interesting numbers. It has come down to around 3.3%. Core inflation is the non-volatile part of the inflation.
Right.
But the issue is that the food prices can very well turn out to be villain in the whole inflation story in the summer. Typically what happens in a year is that towards March, when most part of India is gripped by extreme heat, there typically there are seasonal factors at play that could push up the food prices, food inflation. So if you really look at it, majority of India still is dependent on the irrigation, for their cultivation, and also a large section of the Indian society is they're relying on the low cost protein items like dal, eggs, etc. So the pulses, etc. So these are the items where if there is a shortage, if there is if there are seasonal factors at play, food inflation can spike very well in the March, April, May period. So RBI, what I think is that they wouldn't want to risk the hard-won gains of inflation, which they have, they're very, with great difficulty they have brought it down to 5% from 6 to 7% over the last many years. So maybe they would want to wait a little more to see how the food inflation part is panning out. And food inflation is only one aspect. There are other aspects of inflation that could be at work. For instance, what is happening in the global.
That has changed quite a lot.
There has been a drastic, I wouldn't say drastic, there has been a change in the overall global, you have geopolitical tensions that is still going on. You have commodity upswings, even though it has eased a lot of it. So imported inflation, as they call it, could also be a factor that the Reserve Bank would be working with. So I don't think RBI is at a comfortable point as far as the inflation is concerned at this point. RBI governor, if you remember, the last policy has had stressed that the last mile fight on inflation is the toughest part.
Yeah, I remember that.
So they have brought down the inflation to below 6% level, but unless it comfortably aligns with 4%, and from 5% to 4% on a sustainable basis, it's the toughest part. So probably they will give it some more time.
Right, you mentioned, of course, inflation, as we know, could be the villain of the story, but could growth be the hero here? Because, last 2 quarters, growth has surprised on the upside. Of course, last quarter, we saw growth topping 8%, and even this time around, it is expected to top 8%. From the commentary that has come in from the Finance Ministry as well, right? So, in that sense, can growth for FY25 at least be upped from 7%, the forecast?
There is quite big possibility that they may look at growth with a more optimistic view. That's because in Q4 there was as we all know that the numbers were really surprising, and growth is picking up a lot. But that is also one reason why RBI may not be in a hurry to cut rates. If you look at it, because why would RBI cut rates? RBI typically is in a they go for rate cuts to support the economic growth. So at a point when growth is picking up, recovering on its own, Reserve Bank of India has some headroom to wait a bit. They don't need to jump in and start cutting rates to support growth. On the other hand, inflation remains the key concern, the primary concern of the central bank. As you very well remember that at one point they had to admit their failure in keeping the inflation target, right? They had to explain to the government that why they failed. It's quite a big embarrassment for the RBI as a constitutional body. Ever since the this inflation targeting came in 2015 and MPC started in 2016 June, that was the first time that the RBI-led MPC had to publicly admit an inflation defeat. So in the world of central banks, that's not a very
good thing. That has already happened with the Fed as well, right? Losing credibility because they took inflation very lightly at one point, and look where it got us all, even the global economies. But just a couple of more questions in terms of liquidity management. Can we expect some steps? Because of course, the RBI. I was just reading the RBI had done some 4 VRRs to suck out excess liquidity. But right now, would the RBI be okay to keep the liquidity situation comfortable in the system? Because we are also expecting a tsunami of flows from June onwards when the whole inclusion of bonds happens in the JP Morgan index, right? So at this point, would they want to keep it comfortable, or would they want to keep it in deficit?
Well, Nandita, the RBI's liquidity management has a lot to do with their overall policy management. These are not really 2 separate things. RBI typically prefers to keep the liquidity in a tight mode. Then only the monetary policy transmission happen in the system. If the liquidity is surplus in the banking system, then banks can afford not to take the policy cues in terms of passing on the rates. So monetary policy works effectively only if the liquidity remains tight. So from what I understand, the Reserve Bank of India will intervene with variable repo and reverse repo operations to manage. They will of course make sure liquidity is available for banks, but I don't think they will let the liquidity situation go into a surplus on a sustainable manner, because then that will defeat the other purpose, which is the primary goal of managing the inflation. Liquidity needs to be in a tight mode. Yeah.
All right. Lastly, in terms of commentary from the governor, what would you be expecting? A, on the overall tone, and B, on the kind of measures they have taken to, crack down on unsecured lending, and of course, we saw what happened with Paytm as well. Any more clarity or announcements expected in terms of NBFC regulation?
Well, so there are two parts of your question. What is the overall tone on the policy? So I'll just come to that first. So a couple of points. Like I said, the overall tone will be caution towards inflation, because that remains the primary job of the central bank. That is what the commitment is. Also, you must see that what happened in recently, the Fed retained their policy rates. But if you look at the statements closely, the Fed is saying that they are not in a hurry to cut rates. The inflation still remains hot. That's what Mr. Powell said. So typically, if you go to the look at the historical evidence, RBI doesn't precede Fed in terms of a rate reversal.
Agreed.
So they typically follow the Fed, because that's a much larger economy that has their decisions have much larger impact across the world. RBI waits and they follows the Fed action. So the global interest rates are a very big factor for the Reserve Bank of India. That is one. And the second thing is that also RBI has been stressing on the monetary transmission part. They would want to see the impact of the past rate actions to transmit in the banking system in terms of rate cuts and rate hikes, etc. So RBI has increased the rate by 250 basis points in the current rate hike cycle. That is not yet fully transmitted. So probably in some pockets we could see the lending rates still going up. And you also, I already mentioned about the seasonal factors. So overall, there is no reason for RBI to change the tone, except in terms of inflation forecast. They may draw some comfort from the easing fuel prices, etc., and may keep it largely around the same level or a tad lower. Growth, there could be some possibility of upward revision. Coming to the second part of your question, so that is an entirely different thing, So RBI has been very aggressively scrutinizing the NBFC space over the last 6 months. If I remember correct, I think there have been at least 6 to 7 instances where RBI has, acted, including the likes of Bajaj Finance and JM and IFL, etc.
IFL also. Right.
So RBI's concern is primarily on account of the fact that the bank lending to NBFCs and the further lending from NBFCs to the end user, there has been somewhere the control is going away. NBFCs underwriting standards, a KYC process, etc. There have been some pockets where RBI is not really comfortable. So, but ultimately it's the bank money that is going to the system, and if that's not coming back, it's going to impact banks in some point. So that is one reason why RBI is tightening the credit process of NBFCs. I hear from sources that RBI is continuously engaging with many NBFCs. There are special audits that's happening right now as we speak on some of the key names, and in the coming months we should see probably some more announcement from RBI in terms of tightening the NBFC space. So that is an ongoing action. They have learned their lessons in a very hard way post the IL&FS and DHFL episodes. They don't want that credit exuberance and loose lending to take hold in the economy.
All right, then that's the whole, you explained it in a very, very simple way to put everything in perspective as to why the RBI is really cracking down on NBFCs and how it will actually impact banks in the end. But with respect to this live, of course, we have spoken about how the interest rate trajectory is going to stay the same as of now. No tinkering with rates or even perhaps a stance, but could be some bit of tinkering with the inflation and growth forecast as well. But with that, we've come to the end of this Moneycontrol live session. Dinesh, thanks a lot for taking out time and explaining everything to us and putting things into perspective as to what one should be expecting from the policy this time around. But of course, we'll be getting you live coverage of the RBI governor's address as well as the press conference as well at 12 o'clock that happens. But for now, it's a goodbye. Thanks a lot for tuning in. You guys stay tuned to Moneycontrol for all your other news and updates.